$700 billion. Let that sink in for a second. That is the literally unprecedented, earth-shattering scale of the hyperscaler infrastructure spending race we are seeing this year alone. To put that into perspective, we're watching tech companies outspend the GDP of entire nations just to secure dominance in AI computing. And if that number isn't staggering enough for you, we just watched SpaceX leverage its historic IPO to fully fund a $60 billion acquisition in a mere 4 days. The sheer velocity of the AI and cloud market right now is absolutely breathtaking.
Welcome back to AI and Cloud Weekly. I'm your host, and today we're diving into a highly focused explainer, breaking down what was, honestly, a historic week in tech. We're going to cut right through the noise and translate these massive market headlines into actionable enterprise intelligence, so you and your organization can stay ahead of the curve. So, let's get right into it.
Here is our roadmap for today's explainer. We'll start with the top AI model news, move down into the cloud infrastructure layer, zoom out to big tech strategic shifts, discuss exactly why this matters for your enterprise today, and then wrap up with the key takeaways.
All right, part 1, top AI news. What we're witnessing right now is a fierce, incredibly high-stakes battle between closed frontier systems and remarkably capable open-weight models. On the closed side, you've got giants like OpenAI pushing the absolute limits of agentic capability and security. But on the flip side, open-weight alternatives like ZAI's GLM 5.2 and upcoming models from Reflection AI, which by the way is rapidly positioning itself as the DeepSeek of the West, are offering frontier-level performance at just a fraction of the cost. This is a real game changer because it's giving enterprises actual sovereignty over their data. It means you don't have to send your absolute most sensitive, proprietary business information to a closed third-party server just to get top-tier AI reasoning capabilities anymore.
This dynamic perfectly captures the state of the model race this week. OpenAI's new GPT 5.5 cyber model just hit a massive 85.6% on the highly rigorous CyberGym benchmark, proving it's a powerhouse for automated security defense. Meanwhile, that open-weight GLM 5.2 from Z.AI, it just topped the intelligence index charts with a score of 51, proving you absolutely do not need a massive closed model to win on reasoning. But it's not all smooth sailing for the closed model giants. Google's highly anticipated Gemini 3.5 Pro has officially been pushed back from its June general availability, creating a temporary vacuum for businesses waiting on those multimodal features. And in a highly complex and controversial development, the US government officially banned Anthropic's Fable 5 and Mythos 5 models. The government cited national security concerns over bypass guardrails, while cybersecurity researchers and Anthropic are pointing out that very similar jailbreaks already exist in other top models. It's a really fascinating mix of genuine security debates and political tensions, highlighting just how heavily regulated this software layer is quickly becoming.
Moving right along to Section 2, Cloud and Infrastructure.
I mean, just look at this unfathomable scale. The big 5 hyperscalers are deploying between $660 and $725 billion in capital expenditure this year alone. Amazon is leading the pack with $200 billion, closely followed by Alphabet at $180 billion. Again, to put this in perspective, their combined spending completely eclipses the GDP of most national economies globally. And what's absolutely crucial for enterprise leaders to grasp is how this is actually happening. A huge portion of this massive build-out is being financed right through corporate debt markets. We're witnessing a fundamental shift in how tech expansion gets funded, with these giants heavily leveraging their futures on the massive assumption that AI will fundamentally revolutionize the global economy.
So where exactly is all that money going? Well, a massive chunk is pouring directly into custom silicon. These hyperscalers are racing to reduce their heavy reliance on third parties, and by third parties, we primarily mean NVIDIA. Google is aggressively deploying its 7th-generation TPU, Ironwood, in massive 10,000-plus chip clusters. AWS has over 500,000 Trainium 2 chips deployed as they try to offer cloud customers a cheaper, highly integrated alternative for those heavy AI workloads. Microsoft is heavily in the game too with its Maya chips, though right now their deployment is still somewhat limited within the Azure ecosystem. Bottom line, everybody wants to own their own hardware to bring down those soaring compute costs.
But despite all those incredible custom chip efforts, NVIDIA remains overwhelmingly dominant. They are capturing 41.5 cents of every single AI hardware dollar spent by hyperscalers. Their data center revenue hit an eye-watering $39.1 billion in Q1 alone. So yes, the custom silicon race is absolutely on, but NVIDIA's moat is held together by CUDA, their proprietary software layer that millions of developers already know, already trust, and frankly, refuse to abandon. Until somebody manages to crack that software ecosystem, NVIDIA's grip on the market is incredibly strong.
Okay, part 3, big tech strategic moves.
This brings us to honestly one of the most incredible financing mechanics we've ever seen in the history of tech. On June 12th, SpaceX executed a historic $75 billion IPO at $135 a share. Just 4 days later, the market goes absolutely wild, and the stock jumps up to $192.46. Without missing a single beat, on that exact same day, SpaceX used that newly minted, highly inflated stock to completely fund the $60 billion acquisition of the AI coding platform, Cursor. They literally funded the largest venture capital-backed acquisition in history using less than 1/10 of their 4-day market cap gains. It is just a masterclass in financial engineering.
Now, you might be wondering why on earth pay $60 billion, which is roughly 15 times annualized revenue, for Cursor? Well, Cursor was caught in a classic margin trap. They were paying retail prices for third-party AI models just to run their wildly popular coding assistant. SpaceX swooped in and rescued them from that trap by bringing them in-house. But more importantly, SpaceX bought an impenetrable moat. Cursor developers are generating roughly 150 million lines of real, enterprise-grade code every single day. SpaceX paid that massive premium specifically to secure that exact real-time telemetry pipeline so they could train xAI's Grok models. Data is the new oil, folks, and developer telemetry is the absolute highest-grade fuel for training the next generation of AI.
Meanwhile, Alphabet suffered a brutal week on the talent front, and it triggered a massive 7.2% intraday stock drop that wiped out billions in market value almost instantly. This was all triggered by a critical talent drain over at Google DeepMind. The talent wars have become absolutely ruthless out there. They didn't just lose average engineers, they lost the architectural heavyweights. John Jumper, the lead behind the revolutionary AlphaFold project, left for Anthropic. Noam Shazeer, literally a co-author of the Transformer paper that started this entire generative AI boom, went over to OpenAI. In today's market, losing foundational AI talent translates directly to losing billions in market capitalization. The balance of power shifts the absolute moment these key individuals walk out the door.
Which brings us to Section 4, why this matters today. So, what does this actually mean for your enterprise? How does a $700 billion hardware boom and massive software consolidation change your day-to-day operations? Well, the reality is, the tools you use and the infrastructure you're building on are fundamentally shifting right beneath your feet. You're dealing with exploding compute costs, employees bringing unauthorized AI tools into your highly secure environments, and a direct mandate from your board to figure out AI before your competitors do. So here is how you actually tackle that.
Here is your immediate enterprise playbook. Step 1. You absolutely must navigate shadow AI. Studies are showing that 2/3 of free-tier AI usage is work-related. If you just ban it, your teams are just going to hide it. Instead, you need to understand the usage patterns and consolidate those approved tools into secure, enterprise-grade environments. Step 2. Prepare for the massive shift from traditional SaaS over to agentic workflows. We are moving way past simple chatbots now. We're seeing platforms orchestrating multiple AI agents to execute complex, multi-step business tasks completely autonomously. And step 3, prepare for edge-to-cloud AI orchestration. Platforms like XMPro are pioneering this exact space right now, bridging the massive gap from cloud orchestration all the way down to edge-based industrial AI agents. This is what allows mission-critical physical environments like manufacturing and logistics to actually use agentic AI securely and efficiently.
Finally, Part 5, Takeaways and Next Week. Let's synthesize everything into the new rules of the tech landscape. First, the new rule of infrastructure. This historic $700 billion build-out isn't just cash sitting in the bank. It relies heavily on sustained corporate debt. That means hyperscalers are highly leveraged on AI succeeding in a massive global way. Second, as SpaceX so brilliantly proved, public stock valuations are the ultimate new M&A currency, allowing for rapid, completely unprecedented market consolidation. And finally, the new moat isn't just compute power anymore, it's telemetry. The Cursor deal proves that high-quality, real-time data pipelines are the ultimate advantage for training the next generation of frontier models.
I want to leave you with this provocative thought. With hyperscalers fundamentally restructuring the global computing landscape and hoarding all the top-tier talent out there, is your enterprise infrastructure actually ready for the 2026 AI boom? Take a hard look at your tech stack this week. Thank you so much for joining me for this AI and Cloud Weekly Explainer, and I look forward to breaking down the next wave of intelligence with you right here next week.